Hello and welcome to another edition of Stockwatch. As we kick off the trading week, we're looking at US indices and the Dow Jones in particular, as it's hovering around the 33,000 handle at the moment. However, we've seen vast declines in the index since 2022 began, and this is not only because of the Ukraine-Russia invasion. We're also seeing threats of the Fed hiking interest rates, which will push the economy, supposed to be an expanding economy, Jerome Powell has stated in the past, but what will this mean for homeowners, buyers and lenders as well, as rates will start pushing higher? The Nasdaq and the S&P have also seen major declines since 2022 after, you could say, a vast recovery in 2020 and 2021 since the pandemic is kind of taking a back seat at the moment. But if we take a look at some of the stats, the Dow on Friday fell almost 1%. And it's ended the week 2% down and 9% down so far this year. And the S&P and the Nasdaq aren't far off behind it. Year on year, they're down 12% and 18% effectively as well. So as I said, the Federal Reserve will start looking at raising rates later this month when they meet again for the FOMC minutes. Even though rates are relatively low, it does it does start the process of a rate hike that the Fed have said they'll do at least 4 or 5 in this year alone. So we're looking at the big movers that make up the Dow, the Nasdaq and the S&P. Visa, you've got they plummeted quite far when they moved away from Russia. You've got things like Netflix and Facebook that haven't done too well so far this year. That's weighed heavy on the index as well. So let's just take a look at what we're seeing on the chart. So as you can see here, the Dow 30. Well, as I said, I'm looking for the 30,000 psychological zone, and for me this would be something roughly about here, because if we just pull this back to a weekly chart, I've got it on the daily chart obviously, you can see the vast ascension and descension since the pandemic really took hold in 2020. But now we're going to another level here, and we're seeing now, if we just zoom it in on these past 5 weeks, we're seeing apart from this doji, well pretty much doji, we've got 1, 2, 3, 4, 5 red candles, and we've seen an engulfment in the Ichimoku cloud as well, which will be very difficult to get out of at the moment. Today's trading at the moment, we've seen a slight pickup in demand, but the general consensus from a lot of investors is that the Dow is looking very, very bearish. And what we're seeing here at the moment on the daily chart as well, as you can see here, it's almost like getting in a descending channel, and once it's in a descending channel, it's very difficult to have a turnaround. We need to see good support and a good bounce. The only thing I can see here at the moment is when we had this bit of a false spike, it's coming to a slight support on this level here. And what we're seeing now is another slight move to the upside. However, if this can turn into a bullish divergence, then prices could start looking at that 35,000 handle in no time. However, the 30,000 handle is where a lot of traders are looking at in the near term, at least, as not only this invasion continues, but we're seeing signs of the Fed really starting to make way for these rate hikes as well. If we look on the 4-hour chart as well, this is what I'm been monitoring for the next few sessions. I'm moving away from daily charts and moving back onto our 2 hours and 4-hour charts to see what the potentials are. At the moment, we've got cloud engulfment, which is a good sign for the upside. Good sign for bulls especially, and I am expecting another slight leg higher. However, when we get to these kind of levels here, roughly about 34,000 round, that will be a big test for myself, looking at what the next direction will be for the index in particular. If we have a look on the S&P as well, just seeing on the 4-hour chart, as I said, just looking at the 4 hours at the moment, we're seeing what the possibilities are. Similar progress to the downside than the Dow. If you look on the Nasdaq as well, it's looking pretty much the same. We're looking at these big companies that make up the index, the big players, and we're seeing that their stock prices kind of plummeted since pulling out of Russia. We've got Netflix, Visa, MasterCard, all these big companies that took a stand and moving away, but it's affecting their stock price quite vastly as well. As reported last week, McDonald's, Coca-Cola, PepsiCo, all pulling out of Russia, and this has weighed down heavily on a lot of the indexes as well, plus the additional Federal Reserve rate hikes. And we'll see what is in store for the rest of the month. This will be quite a progression to the downside though. I expect it to keep going. We could have some slight lifts but in the near term, I'm expecting another leg to the downside for a lot of these big players in the market. So as I said, fundamentally driven at the moment, and keep an eye on all the headlines, and we'll see what's in store for the rest of the week. So join me tomorrow for the next update, and we'll speak again then. Bye for now.